Hi, everybody. Thanks so much for joining me. Before we get started, please take a minute to click subscribe to my channel to keep up with all of my latest stock market and personal finance content. And please check out the link you see on your screen right now for a special message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, a lot of the content I put on my channel is about what stocks I think are gonna do the best over the long term. And generally, that's my focus. I am not a short term investor. If I buy a stock, it's usually because I think it's going to do well over the next 5, 10, 20, or 30 years. 90% of my portfolio I think of as kind of forever investments. Having said that, I think 2023 is going to be a very interesting year and that some stocks are going to surprise investors by how well they do. So I came up with five stocks that I think have the best chance of the stocks that I own in my portfolio to beat the market in 2023 if I had to name, kind of a short-term portfolio that I think is going to beat the market. And I like all five of these as long-term investments. That's why I own all of these in my portfolio, not because of what I think they're going to do in 2023, just to clarify. So, first, and this might not come as a big shock to anybody who follows me, is Berkshire Hathaway. Um, and the reasons I think Berkshire has a real good chance of beating the market this year are it's that $109 billion dollars the company has sitting in cash, combined with its operating businesses that do well in any type of market that generate even more cash. And two reasons. One, the cash is finally a decent asset for Berkshire in the sense that it's generating some kind of returns because most of it's in the form of short term treasuries, which are actually paying pretty well right now. So Berkshire's making billions of dollars off of that cash sitting there. And number two, it gives Berkshire kind of an unmatched ability to take advantage of the market downturn. There are still stocks that are great companies that are making 52-week lows right now, and Berkshire has the ability to capitalize on those. So I think that Berkshire is a stock to watch in 2023 and has a really good chance of beating the market. Number two is Pinterest. Pinterest user growth, if you see the chart on your screen right now, kind of took a dive after the COVID pandemic started to wind down. Makes sense. People had less time to sit inside and browse on Pinterest. And in recent quarters, it started to come back, but the market's really not giving it any credit for that yet. I think this is going to be a longer term trend of a return to user growth. I just think a little bit of growth was pulled forward at the beginning of the pandemic, and we saw it kind of reverse a little. I think we're going to see steady user growth throughout 2023, and I think new CEO Bill Reddy is we're going to start to see his e-commerce strategy really develop, and I think that will be the big catalyst that rockets Pinterest higher, especially if it can keep up the progress with its monetization from its traditional ad business. Remember, its international users, which make up the bulk of its member base, are generating very very little revenue for the company. So if it can continue to push monetization, especially internationally, in the right direction, I think Pinterest has a shot of a great 2023. Three is Amazon. Amazon's down 55% from its highs. Never thought I would see that. Mostly on fears of e-commerce, declining consumer spending, higher cost structure. It costs more to ship things right now. So I think that the fears are way overblown, to put it mildly. I think we're more likely to see a soft landing, in other words, avoiding a recession, than the market seems to think. And Amazon, especially on the e-commerce side, could be a big beneficiary if we end up avoiding a recession and the Fed starts lowering rates quickly once it gets everything under control. I think has a very, very good chance of beating the market this year. Number four, one of the more speculative stocks on the list is SoFi, which is kind of the fintech banking disruptor. Right now, the fintechs or SoFi just officially became a bank at the beginning of 2022. So its deposit base is ramping up very quickly. It only makes up about half of its loan portfolio right now. So it's financing a lot of its loans through higher cost means. And as the um, base continues to grow, it should be able to steadily increase profits. The business is growing very fast. If you see the chart on your screen right now, especially on the crucial financial services side, which is things like bank accounts, credit cards, and investment accounts. Those are the people ditching their banks. The lending customers, could still have a relationship with Bank of America or Wells Fargo and use SoFi for loans. The financial services customers are so important because one, they bring people into SoFi's entire ecosystem. and they create a great natural marketing funnel for their lending products. I think closure on the student loan payment pause, which has been going on for almost 3 years now, should be coming in 2023, and that would be a big catalyst for SoFi as well. I think SoFi has a chance to h- handily beat the market this year if things really start to fall into place. And number five, this is the most speculative stock on this list, but one that I think has a great chance to double or more this year is a company called Redfin, RDFN. They are a real estate disruptor. They're the only really tech focused real estate brokerage that wants to compete on price. They charge lower commissions than most realtors do. And there are some good reasons Redfin's been beaten down so much. It's down more than 90% from its highs. It's been losing money at an alarming pace. It's taken big steps to correct that. It's exiting the iBuying business, shutting down Redfin Now, which was a relatively small iBuyer in the first place. And it did made the difficult decision to do 2 rounds of layoffs, the combination of which should help get those losses under control this year. And CEO Glenn Kelman thinks Redfin's going to be profitable next year in 2024. So the brokerage business still has a ton of potential, in my opinion. They have less than a 1% share of the US housing market. Like I said, they're the only ones who really seem to want to compete on price. They have a bunch of other big opportunities in mortgages, which the mortgage market's at a standstill right now, but they acquired a pretty big mortgage originator. The timing of that couldn't have been worse, but over time, that could actually pay off really well. They have a rental business. They acquired the parent company of things like Apartment Guide to get into the rental business, and the stock is extremely cheap right now. I think it has a great shot of being my best performer if I had to call one for the year. But it's, like I said, the most speculative stock on the list, and that's by no means a given. So again, I like all five of these as long-term investments. I want to emphasize that. I own all five of these because I want to still own them in 10 years or more, as long as the businesses are doing well. And I plan to revisit this basket. I call it my market beating basket. You can see them all on your screen right there. I plan to revisit it at several points throughout the year to see how I'm doing against the overall stock market. I believe in holding myself accountable, and I can't wait to see how these go. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.